Liana, I mean, this all seemed to have to do with the fact that the valuation for Zoom just wasn't there anymore.
Exactly. Five9 couldn't see it coming that Zoom shares would fall by a third since they announced their deal. And it's not just because Zoom decided to do their biggest deal ever. Zoom's earnings on August 30th were disappointing, and the stock had been sliding from there. It's pretty rare to see a deal voted down by shareholders, which is what we saw yesterday with Five9 shareholders voting down the deal after working.
All right. Well, I think we're having a little bit of trouble here with Liana's connection, Shonali and Katie. I mean, this is a big deal here. You know, the idea that it got scuttled, and it raises a lot of questions here about other deals that were out there. I mean, we talk about DraftKings as two big pending deals, and there are a lot of other companies that have basically been using their stock to sort of leverage up to make these sort of deals.
So it's interesting, Liana, we have you back finally to talk a little more about this. We were talking about DraftKings right now being one of the companies that's in the middle of cash and stock deals, but are there other deals that your reporters are all looking at right now that could be put at risk given this volatility in the stock market?
So deals sometimes don't come to fruition for different reasons, whether it's financing or other issues. I'm not aware of any deals right now that, you know, shareholders are about to vote them down like we saw with Five9. Stock is still certainly going to be used in deals. Tech, you mentioned, is up today, and there's a lot of tech companies that want to take advantage of the high valuation of their stock to transact. So just because we saw one deal fall apart doesn't mean all of a sudden we're not going to be seeing all stock deals going forward. TMT is still a really busy sector. I could see here on the chart, one of the busiest sectors right now in M&A. And as we are in Q4 now, I think it's going to be a strong end to the year for deal-making volumes, which is what we're hearing from bankers and lawyers on Wall Street.
And Liana, let's quickly talk about how this deal fell apart. You mentioned that it was a vote down specifically. How common is it to see that?
It's pretty rare. Some sources were telling me it might happen once or twice a year. I'm not aware of another deal like that happening, although we are seeing a lot of SPAC deals run into issues when it comes to shareholders, you know, at the vote. ISS and Glass Lewis, both the proxy advisory firms, are recommending against the Zoom Five9 deal. So once we saw that, we probably should have figured out this one's in trouble. What's interesting is that Zoom did not try to come back with a sweetened offer. Clearly, their shareholders have spoken with their shares being down so much that maybe this wasn't something they wanted them to do. Five9 is a very different business than what, you know, we all know Zoom to be.